You are not losing because the market is against you. You are losing because you cannot wait. Every chart looks like opportunity when you are impatient. Every candle feels urgent when your account is bleeding. You tell yourself the next trade will fix it. You tell yourself you see something forming. But what you really see is your own desperation. The market is not emotional. You are. The difference between a professional and a struggling trader is not intelligence. It is control. The professional does not need to trade. The amateur feels compelled to trade. That compulsion is expensive. Before every buy, there must be a test, not of the market, of you. Are you entering because the setup is clear, or because you are afraid of missing out? Are you following a plan, or are you chasing movement because sitting still feels unbearable? Most traders fail this test before they even recognize it exists. They buy because price moved quickly. They buy because others are buying. They buy because red candles scare them into thinking they are late. They buy because they need to feel involved. That is not strategy. That is weakness dressed as confidence. The perfect entry point is not found in excitement. It is found in clarity. It is found when risk is small, logic is firm, and emotion is quiet. If you cannot define your exit before you enter, you have no business clicking the button. If you cannot accept the loss before you take the trade, you are gambling. The market punishes urgency. It rewards preparation, and preparation is painful. It means watching moves without participating. It means allowing price to develop. It means refusing to act until your conditions are met, even when your instincts scream otherwise. Most traders want more trades. What they need is fewer. Before every buy, there must be a filter, a pause, a moment of honesty, because the market is not your enemy. Your undisciplined mind is. Every buy must earn the right to exist. Capital is not thrown at the market. It is deployed with precision. Before I enter any position, I run it through a 5-step test. Not because I enjoy rules, because without them, emotion takes control. First, I ask, is the market aligned with the larger trend? I do not fight the current. If the tide is against me, I stand aside. Many traders lose because they attempt to predict reversals without evidence. They want to be early. Early is often wrong. The trend exists for a reason. Respect it. Second, I ask, has the market proven itself? I do not buy weakness hoping it becomes strength. I wait for confirmation. I wait for price to show commitment. Strength must reveal itself before I commit capital. Impatience buys anticipation. Discipline buys evidence. Third, I define risk before I imagine reward. If I cannot identify the exact point where I am wrong, I do not enter. A trade without a predefined exit is not a trade, it is a bet. Losses are inevitable. Large losses are optional. My stop is placed before my entry is taken, not after. Fourth, I measure my own emotional state. Am I calm, or am I reacting? Did I just take a loss? Am I trying to recover it quickly? If my judgment is clouded, I step away. The market will be there tomorrow. My clarity may not be if I continue in frustration. Fifth, I ask whether the reward justifies the risk. If I risk one to make one, I am working for the broker. The opportunity must be asymmetric. Small risk, meaningful potential, not guaranteed profit, but favorable odds. Most traders skip these steps. They see movement and they act. They do not check alignment. They do not wait for confirmation. They do not define risk. They do not examine themselves. They certainly do not measure reward properly. And then they blame the market. The market did not force the entry. Their impulse did. The perfect entry point is not about precision timing. It is about psychological readiness. It is about entering from a position of strength, not desperation. You struggle because you believe more trades will solve your inconsistency. They will not. More discipline will. You chase because you fear missing opportunity. Yet opportunity often appears after patience. You overtrade because silence feels unproductive. Yet silence protects capital. The 5-step test is not complicated. What is difficult is obeying it. You will watch trades run without you because they did not meet your criteria. That will hurt. You will feel tempted to bend your rules. That temptation will test you more than any market move. But understand this, the enemy is not volatility. It is not news. It is not manipulation. It is your lack of restraint. The trader who survives is the trader who can say no. No to mediocre setups. No to emotional entries. No to revenge trades. When you pass your own test, the entry becomes simple. Not easy, but simple. Because you are no longer trading hope. You are trading discipline. And discipline is not built in comfort. It is built in denial. Denial of impulse. denial of urgency, denial of the voice that tells you to act simply because price is moving. You must understand something clearly. The market does not reward effort. It rewards accuracy. You can stare at charts for 10 hours and still lose money if your mind is unstable. You can take 20 trades a day and still go nowhere if each one is fueled by emotion. Activity is not productivity. Motion is not progress. Restraint is progress. There will be days when nothing meets your criteria. Those days are not wasted. They are victories. Because every trade you refuse that does not qualify protects your capital and strengthens your discipline. Capital is ammunition, and ammunition is not spent randomly. It is reserved for moments of advantage. The perfect entry point is rare because perfect mental alignment is rare. When your rules, the trend, the risk, and your emotional state all agree, execution becomes clean. There is no hesitation, no second guessing, no internal argument, just action. And if the trade fails, it fails small. That is strength. Small losses, controlled behavior, consistent standards. That is how accounts grow, not through excitement, through control. Most traders want certainty before they enter. Certainty does not exist. What exists is preparation. You are not paid to be right every time. You are paid to manage risk every time. There is a difference. The amateur obsesses over prediction. The professional obsesses over exposure. Exposure must be controlled. You cannot allow one impulsive decision to erase weeks of discipline. Yet the is exactly what happens when you abandon your process. One emotional trade, one oversized position, one moment of frustration. That is all it takes. The market tests your character more than your analysis. It tests whether you will follow your rules after 3 losses in a row. It tests whether you will stay patient when price almost reaches your entry but not quite. It tests whether you will remain calm when others boast about profits you did not chase. If you break under those pressures, the problem is not the setup. It is you. Strength in trading is quiet. It is invisible. No one applauds the trades you did not take. No one congratulates you for protecting capital. But that invisible discipline compounds, and over time, it separates those who survive from those who disappear.